Good morning, guys. Good morning. Somebody give me a sound check. Let me know if you hear me okay. Okay. Good morning, Miguel. How are you? All right, let's see what we got going on over here. Let me see who's in the room. Okay, I'm going to let people slide in. We have I could not start Zoom at 9:45. My choices are 9:30 or 10 o'clock. So I just decided, okay, we'll just do 9:30 every day this week because it's better than 10 o'clock because it gives us like a half an hour of pre-prep. Good morning from here. Good morning, good morning, good morning. Let me let everybody crawl into the room here. Let me just post in Kathy's room. Okay. All right, so I wanted to show you, I just kind of wanted to start out with the algo in trading, basically the algo that we're trying to do right now, which is the classic fail trade. Basically, this is the algo program, and you guys don't have this yet because we're still working on it. I just want to make sure that we get everything done. I think 5. Hopefully, we'll have 5 today, and if we have 5 and 4 altogether working, I'll be able to fully show it to you tomorrow. But I ran this overnight on 8-cap numbers. As you can see, this is the 10 set currencies that I use it on. I think it was how many? 1, 2, 3, 4. I think 15. There's 15 currencies. I was using a 5-minute chart because I'm using 5, 10. Excuse me, I'm using 10, 20, 10 target, 20 stop. And basically, if it doesn't go to 10 target, I consider it to be a fail. And then it would trigger a trade here. As you can see, it triggers a trade and it works. So this is the record overnight. As you can see, it's pretty good. It's what do we have? We have 4 losers against 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12, 13, 14. So that's 14 out of 18, which is very, very high. 14 divided by 18. It's a 77 hit rate. We're at 66 break even, so we are 10 above our break even point, which is obviously, very, very interesting, very attractive. We'll keep working on this idea. I had one sort of very interesting additional idea to all of this that I think might even help us gain a little bit of a better edge. And I see what do we have here? We have Aussie CAD on the sell side. I'm actually curious because I'm running this on my oh, it's not coming in. That's interesting. So I'm running this on Oanda contemporaneously, and different spreads triggering different targets because they have. That's really interesting. Why didn't the Aussie CAD should have triggered? Huh. All right, I gotta go figure out why the Aussie CAD is not triggering. Okay. So we're working out on all the primary kinks. It seems to be doing the correct thing, certainly on 8-cap. I'm still trying to figure out, like, I'm not getting quite all the trades on Oanda. That's just a function of different spreads probably. But what's interesting, by the way, as we are talking, we have possible setup in NAS right now on futures. So if this thing goes, we're going to get long. I've been trading this actually with a 15 stop, 7 target. So we'll see if this particular trade triggers. Let's see how much time we got before I speak. I got 36, 37 seconds. So we got to wait. This I don't know if the CFD. It looks like a very, very thin move back and forth. I don't know if the CFD triggers this, but I'm going to take the futures as the signal here to the upside. So again, we'll see if this works. Okay, so I'm in the trade. I'm looking for 7. We'll see if I'll just wanted to let you guys know I'm in on this move. But what I wanted to looks like, ooh, it's really moving. Okay, you know what? I'm telling you, it got done. That was super fast. I don't know if you guys took the 5-7 points, that definitely worked. So that got done. So this is on the indices. I'm literally just trading, as I said, upside bias. Just straight up, strong trend breakout, upside bias, no problem. Only from 10 o'clock or 9 o'clock, let's say 9:30 GMT to 1900 GMT. Okay, basically 5:30 New York in the morning is when I start looking for trades. And really, there, all we're trying to do is do a 75%, maybe 77% if we're super lucky. Accuracy hit, that alone is more than enough to put us into positive territory, across all things. But you know me, I'm always looking for more and more edge. So let me change the profiles on this to. Hang on a second. The CFDs. I'm having a hard time with this. Okay, it's taking its time. Hang on a second, guys. It's going to take its time. Ooh, what happened here? That's not the one I want. No, I want CFD trade. Sorry. Okay, so CFD trade. So let me see if I have the right, because I want to show you failure. Yeah, this should be failure. I guess it's, why is it not? Okay, there's no failures. Okay. Why is this not? Let me see if this is working. Actually, you know what? Hang on a second. Control I. Let me delete this. Close. And go in here, combo alerts. Say okay. I'm looking for failure. Why is this not giving me any failures? Oh, I know why. Because this is, sorry guys, stupid. Okay, profit target has got to be 10,000. Okay, yes, because it's the micro pips. Let me see if this works. Okay. All right, it's finally starting to work. Okay, so this isn't, very clean and clear here. I only have like one failure. Let me see if I have another failure somewhere down the road. Bear with me a second here, guys. I want to find failures. Okay, so one of the awkward things about the indicator right now is, let me see if there's any questions here, first of all. Good job, Connie. Good job on the 6th. One of the awkward things about the way we have set up the indicator is the failure actually happens off of this candle. In other words, this candle does not go to full target, right? But the way we've labeled it is that the next break, this is a breakdown. You want to take this trade because that suggests that the prior trade was a failure, which is fine, which is totally cool. And you understand that we're basically coming in on the entry on this candle, and you see this is a very, very good candle, right? However, what I realized that's kind of very, and obviously here, here you have a failure of this one. This one doesn't go to target. This one doesn't go to target. And by the way, just sort of like to understand, these are all what I call false failures. These are all happening at very low liquidity hours, so we wouldn't take these trades. But assume, so in other words, you're going to get a whole bunch of false, diamonds are suggest failures, right? So you're supposed to take this trade because it's supposed to be a good trade to the downside, it's supposed to be a good trade to the upside. That's true, except when it's not. And it's not true when you have this kind of a complete range environment. In a range environment, right, all of these are going to be false signals, because all it's going to say to you is it failed to go to the downside, so buy the upside. But the upside is also going to fail because it's a range. There is no continuation whatsoever. So it failed to go upside, then sell the downside. Well, in this case, the downside actually works because that's the beginning of the European Open. But basically, you're going to get these tremendous amount of ping pong fails in non-liquid hours, which is why the failure signal is only truly valuable when you have high degree of confidence that there'll be some continuation move, right? So be that as it may, I just want everybody to understand it's not a wherewithal to guarantee you accurate signals. There is a regime in which all the signals are actually super false, but it makes perfect sense because in a range-bound regime, of course, every signal is going to fail, and of course there'll be no continuation. I just want to make sure everybody understands that. And in fact, we could even design the beauty of all of this structures. We could even design eventually down the road a trade where we can actually do the opposite of this, right? So if we have a failed signal, but we know that we're in a range environment, then the single best thing we can do is actually sell this, buy this, sell this, and buy this. Even if you bought this and this was ultimately a continuation trade, I think you actually could have made a little bit of money because it still bounces back up. The point being is that in a range-bound environment, this signal actually is very valuable to the opposite side, right? Everybody with me on that? Does everybody see how that works out, right? Give me a yes, please, in the room, so that I know I'm not talking to an empty wall. So, but if we're focused on our, trend trading, momentum trading during the high liquidity hours time frame, then here's an interesting twist on our idea. So the basic premise, the way the algo works now is you have a failed signal. Oh, sorry, this is the failed signal. This is the failed signal. This signal doesn't go to target, right? So this is a failed signal. Therefore, this tells you sell because it's a quality sell because the buy was a failure. Just like this is a quality buy because the sell was a failure, right? And what we do is we typically wait for the strong trend signal to materialize. Let me get big here so you guys can actually see this. We wait for this particular signal to materialize and so on and so forth, right? But my argument is, if we make the following assumption: if we are in a if we are in a momentum environment, meaning that we're trading like during our high liquidity hours in NASDAQ, basically 6 o'clock in the morning New York to about 1500 hours New York, right? When London and New York and everybody is ready to deal. And we get a failed signal, a failed signal. In other words, a signal that does this goes to the upside, doesn't hit target. It just simply doesn't extend, right? Then instead of taking the short from this angle, so the way it works is this fails. This is a short. We get short over here at this price, right? And then we're trying to milk the trade to the downside. It actually behooves us. It actually is a lower risk, better entry trade once we get a failed signal to just get short on, and this is a very interesting twist, on the first positive candle after moving average crossover. So here's the reason why that's an interesting twist on the whole affair is we get in early because basically failed signal to the upside suggests there's going to be more downside action. The bears are in control, right? So once we get a moving average crossover, we have a lot of confidence that they're going to start selling the product, right? But if we wait for the first green candle, we then get ourselves, usually there's always a sell and a retrace, right? And we're just going to get short on that retrace. If we get short on that retrace, we're coming in at a very advantageous price, right? Basically, maybe sometimes 10 points ahead of this price, which puts us in a much better risk reward situation. So if we assume that this is a legitimate signal, then we can get to come in early at better price as a possible way for us to run this story. And that's kind of very, very cool. I find that to be like a really interesting way for us to run this. I'm trying to see if I could find any. Let me see if I could find. This would be like, I don't know, 1,000. Really? This goes for full 10? Or maybe this is 10,000. I don't even know what the micro pips are here. Maybe this is a 10,000. Let me see. The problem is we have to adjust for all of these crazy instruments with the micro pips. Is it a 10,000? So what I gotta do? Okay. Yeah, I guess so. Yeah, it is 10,000. Okay. So here we go on the Dow, right? So on the Dow, hang on, I'm sorry, guys. On the Dow, so here's, upside signal does not go full 10 points. Essentially, the upside fails. We get a moving average crossover. Now here, the entry actually would be over here on this candle, right? This kind of interesting. Sometimes you can get it in front of the trend break, sometimes behind. But regardless, you're coming in, the point being is that you're confident that this is a selling regime. So you're coming in short here at 33.66.6, right? With a stop of like, I don't know, even if you're using a 20 stop and a 10 target, I don't even know. You need 40-20, because this would have been, you would have come in 66.06 would have to be a stop, and then 46 would have been like right over here. So you would have made money. But the point being is you get good, you get very, very good direction in terms of the confidence of where it's going to go. And it's an interesting variant of how you'd want to trade this particular setup. I'm just trying to see if I could find. Okay, here's another good example. So this is what I mean about getting in early, right? So this fails, right? For whatever, I don't even know, like, I don't know what parameters I set for this thing, but let's just say, it failed, even though it really doesn't fail. I mean, it's clearly, it has strong upside, but let's imagine it fails. If it fails, then this green candle is where you would have been entering very early on the downtrend as a potential trade. I'm just having a hard time trying to figure out what the hell what these markers are. 33.804. I guess so. This goes up to, closes here at 804. The high here is 835. So I think, okay, let me see if I could do this correctly. So I think I overdid this. This has to be, so let's make it 2000. 2000 makes it 20 Dow points, which is what I want, right? And so if it doesn't go 20 Dow points up, okay, yeah, it's good. This is it. Doesn't go 20 Dow points up, right? And okay, here we go. So this is another really good example of how we can profit from an earlier entry. downside fails, moving averages crosses over here. We're looking for the first red candle after the moving average. Red candle, because we're going to buy on a decline to get ourselves into better prices. So we're in at 33,785 on the close over here. Let's say we're just looking for 20 points. It comes in over here to 95 right over here. Boom, very, very little slippage against us. On the other hand, when we're coming in on the breakout move, especially in a very, very low, quiet volatility period, the breakout move just doesn't have enough extension. The breakout moves fail miserably during Asia session when there's no extension, right? They're great for US session for when things are really, really working. This is simply taking this whole concept of failure, which is what we love to trade, and making it even more advantageous in our favor by getting in earlier at better prices. That's all we're trying to do. And obviously that we have all of these parameters already plugged in. It's super easy for us to reconfigure the idea. Yeah, Karen, hey, we did start early. So the reason why I wanted to do 9:45, but as I was trying to explain, Zoom only allows me to do half-hour blocks, and the choice was 9:30 or 10. So I was like, you know what? Let's just start 9:30. We'll just start pre-market, and just see how it goes. Just run 9:30, 10:30 this week. I think that's probably okay because we can always, we did take one trade earlier today at the beginning. So yeah, I think it's going to work better for everybody anyways. I hate to keep everybody, like, especially Australia, it's really torture to keep them up so late. So anyways, we're refining our failure entry by saying, okay, you know what we're going to do? We may even consider the idea of when we get a failure signal, this is the failure signal, right? Of entering right on the moving average crossover in the opposite direction of trend. So in other words, we want to be buying the first red candle in an upward breaking down, or or selling the first green candle in a downward breakdown of the failure. So I'm actually, let me see if I can find an upward failure. Okay, here's an upward failure. No, sorry. That's downward failure. I need a red. I need a red. This is why it's very confusing because this is, okay, so here's upward failure. This thing fails to the upside, right? In this particular case, actually, coming in, waiting for the first green candle is late. It's like, the rule should be, if the green candle comes in, I guess the way we should really refine is, if the green candle comes in before the trend break, then yeah, we definitely want to do the green candle because that's early. If it's after the trend break, then the trend break is the dominant candle. So we take the trend break here at 52, and obviously that works right away for plus 20 on the downside. Because if we don't have a retrace candle, so basically the entry choice now is retrace candle or trend break candle, whichever one comes first on a failed setup. So when things fail one way, we're ready to go the other way on a retrace candle or a trend break candle, whichever one comes first. That's the way we want to kind of define it as a proper structure, right? I'm just going to see if I can find any more failure moves here. This is Dow, so it's a little bit hard. Okay, so here's a failure move. Okay, so this is a good example. So fail to the downside, right? So obviously this is a positive to the upside, which implies failure to the downside. So failure to the downside, moving averages cross over, we buy over here because this candle comes in prior to the trend break, right? Better entry, we get it. As a matter of fact, by the time we get to this candle, we're already in profit, all right? And we're already making money. That's the idea. Earlier, better, stronger, more profitable. That's the whole point. But the whole concept, as I was saying, the whole concept of trading failure certainly validating itself this is just, as I said, this is just the basic, trend line break failures overnight, and how they ran in the on the FX space. We'll keep going on all that stuff, and see how it goes. This is interesting. Odd cat. Oh, what the hell? Wait, hold on a second. Sorry, I'm just curious why it's triggering one. Yeah, so this is odd cat. Huh. Fucking Oanda. It's interesting. The spreads on ACAP are so much better. They're getting me into earlier trades, but that's just that's the nature of the beast. Okay. So I wanted to kind of run that through with you guys, to see what's going on. As far as setups go right now, we don't really have that much. We have the only thing we have right now, possibly. We don't have. This is not really a failure because here it definitely went 10 points. So if we closed over here, was at 52. The low over here was 40. So it definitely was not a failed signal. So all we can do now here is possibly trade, the big breakout. Let's see if I can. We'll watch on the DAX and see if it's got a big breakout. The Nasdaq, we already traded to the upside. This particular trade, it's already done. Nasdaq is kind of curling over. We don't have any setups right now. And the Dow is, let's see where the Dow is at. Dow is actually to the downside and curling. Oh, we need the S&P. I haven't looked at the S&P. No setup yet on the S&P. By the way, if you get these multiple things, it's just because it's MT4. It keeps painting. You just hit edit, hit close, and it will reset. It'll just give you a nice clean picture. So S&P could possibly be upside there right now. So we'll trade that. I've been trading that with a 2-3 structure. That is two target, 3 stop. That might be too tight on CFDs because the spreads are just so big, but we'll see. So let's I'm just waiting to see if the S&P triggers. So far, it doesn't look like it's triggering just yet. Trying on this one. Let's see if this candle breaks us out. Where are we at? 9:59, 10 o'clock. Got 30 seconds. Let's see if this candle holds. By the way, you guys, are you guys liking the large symbol structures? Is easier to see on the screen now? Okay, we're in the trade right now. So this would be targeting like 35. Let's see if we can get 35 out of this trade. Getting close, actually. Getting very close. We'll take that here. I'll take it at +5. +3. So if you took that trade, that was good for +3. Excuse me, not +3. +1.5. I'm thinking of wrong points. Thinking Nasdaq points. But it's it's good. It's probably I think it could work more, but it's one of those days where we've already had the big move off of the CPI. CPI came in, by the way, I totally forgot to talk about Funda, but CPI came in hotter than expected, but not so hot that it completely spooks market into thinking that inflation is runaway inflation. It's, it was within expectation. That was actually bullish the market. You see the market really recovered here and stay pretty big. S&P is trading at all-time highs. It's probably, it could extend a little bit higher, but we'll take what we can get right now as a trade. I am using Oanda's MT4 platform. Yes, I am, Peter. I am. So if you're holding for the 35s, what was the high over here? 34.15. Yeah, the spreads here are just, the S&P spreads are kind of horrific. Try to trade them on the CFDs. That's why I guess everybody trades the Dow. But the Dow has been completely non-cooperative as far as the uptrend goes. And then what I was going to say to you is, if you really, 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 really want to get crazy with the stock indice trading, right? Remember, we said that stock indices are upward bias instrument. So, so where are the indices? No, Peter, I'm an American. As Americans, I can only trade FX. I don't trade CFDs. I'm not allowed to trade CFDs. That's why I trade futures. Okay, for everybody who's new in the room, the global rules of trading are the following. Americans are not allowed to trade CFDs at all. So Americans are only allowed to trade FX, which is why, my real accounts, I only trade FX in the US. And for indices, I trade stock index futures, which of course you're allowed to do in the US. And that's why I have the ACAP demo account, because I can't do a real account on ACAP. So that's how it works. If I was not a U.S. citizen, I could trade CFDs with Oanda. Okay, what's going on here? Dow. See if the Dow is doing anything. By the way, if you held the S&P, and again, as I said, the S&P is really a stock index futures product, not a CFD product, unless you're trading it for kind of positional basis, then that may target. But I am, because I'm looking at my futures, that would have made target. Oh yeah, like if you're not an American, most people don't know that, but trust me, all Americans know this. That's why, that's why. So that's why I have to explain this all the time. Okay. All right, let's see what's going on here with the Dow. Maybe we get one more shot to the upside. The Dow has to be traded with like a 40-20 stop, because it's always going to be a big, a big mover. Although I take it back, this isn't gonna set up for us. You know why it's not gonna set up for us? Because this high break is actually below this low break, so it's not even going to give us a strong signal, and we're not going to trade a weak signal. So never mind. Dow is not even a setup for us, so we can just ignore the Dow. Nasdaq is crawling down a little bit. So DAX broke out to the upside. Okay. I hate the DAX, but we should probably give it a shot here. And let's say we're in at 72. Okay, we're going to try 72, targeting 82, stop 52. Let's see if we can survive the inevitable move back and forth in a DAX. But this was a pretty decent breakout. We should be able to take the trade. I noticed, by the way, it's very interesting that the whole upward bias. I haven't seen anybody do the analysis on the European indices, but my guess is that the upward bias in European indices would be weaker, simply because European indices generally don't have nearly as strong an upward appreciation as the US indices. But I still think, if I were to bet, that it would probably be it would still be, like 2 or 3% points differential, which is a thin margin, but still a positive margin to the other side. You know? So, just crawling in this our typical torture of DAX. I really don't know why I even bother with DAX. It's such a non-trending instrument most of the time, but we'll leave it as is. Oh. Let's look at so I actually had a lot of good success with euro. I wonder if I can do this by symbol, right? So so I'm running like a whole bunch of crosses as well as pairs, and it sort of proves my point that crosses generally. So I mean, sometimes they really work well, like in this case, but crosses generally as a trade idea are going to be weaker than pure trades, because you see, euro pound getting. And I think it's only once. I thought it was twice. Got clipped out once. So euro got clipped out, pound got clipped out, Swissy got clipped out because we had a reversals in the moves. I mean, actually, honestly, not enough data for me. I need to run this. I'm going to run this for a good 2 or 3 weeks to to get some deep, in-depth data on whether there's really any difference or whether the edge is pretty good. Because right now the edge is super good, and I should just simply leave it alone. As far as the thing goes, the only other thing that you realize when you're trading FX, and this is an important point, once you kind of unleash this thing fully, is you have to normalize for pips, right? Because what's happening is a lot of the winners are only 70 to 75%, because what you need to do is you need to bet $1.25. This is because CAD pips are $1.25 with the US pips, Kiwi pips are like $1.30, right? So you need to overbet position size. You can't have not every. It has to be normalized for pip sizes, and underbet for the pound. So your pound would probably be around 0.8, right? Maybe even 0.7. So that when it loses 200, wins 100, right? If you were to do that, what's interesting here is if I were to normalize this, right? The actual P&L should be, let me see, I forgot, what is this? Let's do it by profit. The norm P&L, so it's 4, right? 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So 14. So 140 minus 80 should be 600. If I was normalizing my pips, they'd be 600 instead of 300. Peter's asking me why don't I trade indices on the MT4 platform? Because I trade indices again on the futures platform. I trade AMP futures. I told you. So that's why the thing is that I don't have the 5 yet. We're waiting on the combo 5, because we always do 4 first. But the moment we get 5, that this is the combo in its like 1.6 variant. Once we get the final variant, it's going to be going over here. So the same strategies I advertise or I promote on the CFDs, I use myself on futures. Okay. So so much excitement going on in the DAX. We moved exactly 0 points. We're at 73 at 73. I'm actually gonna, you know what? I'm gonna kill this trade. I'm just gonna take my 1 point profit because I hate the DAX. I don't want to watch it for the rest of my life. Everything else here is kind of in a state of frozen animation. The most important thing for you guys to do right now is to be able to just use the indicator to position yourself into good quality trades going forward, right? On a manual basis. So you could look for those trades on FX. You can look for those trades on indices, so on and so forth. So I'm just gonna change this back to my indice to my FX profile, so that I can continue running the algo in its native form. Already, I see. I already missed one trade on the algo, and then you know, we can come back tomorrow, examine more of how the algo is working, so on and so forth. Okay. All right. Any questions here? You can't wait for using the algo. I hear you. I hear you. Should be ready. You know, should be ready maybe as early as tomorrow. Peter, no, you as an American, again, you can use combo to trade FX. Okay, let me. I think for any American who's confused, we have this conversation all the time. You're an American. If you want to trade combo, there are two things you can do. You can trade combo on FX, which is an MT4 product, and no, I'm not spending a lot of time doing something we can't do. First of all, Peter, 90% of our customers are non-US, okay? US customers are not the most important thing in our base. Secondly, every US customer who is with me trades stock index futures, okay? Because that's what the US customers, that's the product for the US customers. We have the same product, the same indicator, the same EA for US customers, an MT5 EA with AMP futures, okay? So if you want to trade stock indices, you trade stock index futures because that's the only thing you're allowed to do as a US customer, and you trade it with AMP Global because that's the only broker that allows you to trade MT5 on futures, okay? I think you probably, I'm sorry, you probably came in late because all the US customers noticed, and you know, you probably didn't know any of this. So I'm glad you're asking this because a lot of people probably don't notice. But I have to constantly repeat it every single month because we have new customers. But that is the protocol for anybody who's, as a matter of fact, we have a lot of non-US customers who prefer trading stock index futures because they're a much better, much cleaner execution platform with much better spreads than CFDs. So you know, the advantage is as a non-US customer, you can do both. For US customer, you can only do one. But I hope that's clear. Yeah. The algo has a trailing stop. The algo has a 2-exit structure. Grassi, we got all of that down already. That's yeah, no, and you should stay with Oanda because this strategy is a great strategy for FX. Okay, it's not just stock. I just trade stock index futures every day because that's what's interesting as a live trading instrument. The euro moves 10 points in 10 years. You cannot scalp the euro. I was literally in a trade in euro looking for a 10-point profit for 10 hours yesterday. Currencies are the world's most boring frigging instruments to scalp. You cannot possibly scalp currencies, but you can scalp stock index futures because they move 10 points every minute. That's why we live trade stock index futures. Okay, because it's a very when we're live trading, yeah, that's fine. You know, and you could trade you can trade futures with any broker you like. The point is that if you want to trade futures with the indicator and the EA, then you'd have to do it with AMP futures. So Karen was actually Yeah, exactly, exactly. Um, Everybody trades different things for different things, and FX to me is a longer term the advantage of FX is on an algo basis, which is what I'm really trying to get to, is we get to do lots and lots of trades without having to look at any of them on very, 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 very small leverage. So there's very little risk. And, you know, with that, basically what happens with FX is you have to make 10 trades to make 10 net points, right? That's literally to me, I think is the end. But if the algo is trading it, what do you care? It's not, you're not doing any work. The algo is doing all the work. So our whole job is just to fine tune the algo to the point where we have lots of confidence that every day after it does 20 trades, it drops 10 net points to your P&L. If we can get to that level, we're in really great shape as far as trading FX. And then of course we can extend it to, if you want to trade it on a daily chart or a 4-hour chart for 100 points or stuff like that, we can do it as well. But that's sort of like my end goal with a combo algo for FX. There's no way you're going to be able to just pick and choose 1 or 2 great trades in FX on an algo basis. You have to do lots of trades, very, very small size, and let the law of large numbers and the law of the positive ratios take care of themselves. You got to make a lot of widgets to make the process. With indices, because we have much bigger movement, much faster movement, and because we have only 1 or 2 instruments that are really interesting for us to trade, and because we know the hours when those instruments trade, really aggressively, we can be far more selective. We can have 3 or 4 quality trades a day and just boom, boom, make our points, both on an algorithmic basis or, on a semi-prop basis. So, different approaches, but the same structures. Does that make sense to everybody? Does everybody agree with me that that's kind of the game plan? Because FX is a 24-hour a day market, and indices are like an 8-hour a day market. That's basically it. Even though they trade 24 hours, they're really like an 8-hour a day market as far as real opportunities for us go. So the twist today, as we keep exploring Karen's great insight of trading failure, is trading failure earlier. Okay, Peter, sorry, again, let me, and you're asking good questions because you don't know. About a year and a half ago, Chicago Mercantile Exchange introduced micro contracts, which are 1/10 the size. So the tick size on the NQ is only $2. That's what we use as our basis. No, volume, really? How about, is 2 million a day small for you? Are you serious? I mean, really, trust me, I would not be recommending anything that I didn't think was going to be an important product. We trade NQ, YM, ES on a micro basis. Each one of them has between 500,000 to 1 million contracts a day, which is about 449,099 more contracts than you need in order to trade liquidity. They actually have better liquidity than the big contracts. The spreads are tighter. So those are all not. That's the beauty. That was the great. That was, as a matter of fact, that was the reason I started getting interested in indices, and that was the reason why we started moving in that direction, and why we've made so much progress, was because when the CME decided to go to the micro level, it enabled the retail trader to participate in the exact same price action at 1/10 the leverage. So much, it turned futures into CFD products. That's basically it. And so that became very, very cool. Yeah. Okay, thank you for asking all the questions, because there's probably lots of other people who are US bound who don't, or even non-US customers who don't know this. And the thing is that every month I should really repeat this information for everybody in the room because it's new for people who are new. But everybody who's been trading already knows all this information. But yeah, I probably should one day do an FAQ about, you know, differences between all the products, what they do, how they trade them, and you know how you get into all of this trading. As soon as I finish all my trading research, I'll get right onto my logistical questions. Anyways, pretty good day today. It was, you know, we banked NQ, we banked S&P. I don't even know what we did on the DAX. The DAX is still 72, 73, so the DAX was flat. A lot, you know, there wasn't much action. I've noticed, by the way, I don't know if you guys noticed this. I've noticed that the price action has slowed down markedly. It's markedly, right? We're starting to see a lot less volume. I wonder if we're already starting to get into the summer lull time, and that's, you know, going to be part of it. And this is really good because, you know, a lot of this stuff is slowing down. The algos are going to be coming online, so we could at least follow. We could at least follow the algo structures every day. You know, once we have those ready. So hopefully, I have 5s ready for you guys tomorrow. The 4 is already ready. I'm just not releasing it yet, just because I want to make sure that we get everything all in sync. The latest, you know, so we don't have to re-update. And you know, look at the idea of the moving average crossover early trade, because I think that's a really, really interesting final twist. Our whole essence is to always get into trend as early as possible, right? Get into high quality, high probability trend as early as possible. That's really what we try and do all day long. And this may be kind of the final twist to that. Okay, so let me know. Let me know on that. All right, guys, everybody have a wonderful day. I got to run. I'll see you guys tomorrow. Those of you who are in my MT4 class, I got an MT4 class tomorrow morning, and then we'll do the regular class at 9:30. Okay. See you guys later. Bye bye.